What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on Tesla stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And on today's video, guys, I will show you the crucial levels for Tesla. I will show you a bear count and bull count for this stock. I will show you my forecast for the upcoming days and weeks. On top of that, guys, on your top right corner, you can see the link to the video that is related to Tesla's technical analysis. And there you can find that my win rate on Tesla is more than 75 or even 80%. That is why you can rely on my technical analysis as a part of your due diligence. On top of that, guys, I have to admit that for now you can drastically improve your technical skills by joining my Patreon account. And here you can see the most recent updates that I made for my Patreon members. As you can see, I have Zoom meeting, 30 minutes Zoom calls for my gold member tiers. On top of that, guys, I explained a lot in my tutorials video. On top of that, guys, I made daily updates on the current status of the market. I show to my Patreons crucial news that can impact the markets in general. On top of that, guys, as you can see, I made a lot of videos that is related to different ticker symbols like SPY, QQQ, TQQQ, Cocoa, Palantir, RKLB, HIMS, Wix. Previously, guys, I made a video on Disney. Here you can see general market update. And guys, even during the crashes, I explained to my Patreons what crucial levels this asset might hit in order to, for example, close the gaps. As you can see, on Monday, Tesla was at $227. The lowest point was right here at $225. But I told to my Patreons that it has to move even lower, about 4%, in order to close the gap. And it was the price point of $217.07. And guys, take a look right here. I told to my Patreons about 4% more to the downside. And when Tesla hits 217, it doesn't mean it has to go to the upside immediately. And guys, take a look right here. Let's switch to hourly time frame. And here you can find the most recent, the lowest candle, I would say, that hit, as you can see, $215. You can find it under the letter L, $215. And then, since this trend reversal happened, it is up by 14.06%. This means, guys, you can rely on my technical analysis as a part of your due diligence. So, and let's begin today's video with the bigger picture of this asset. Let's switch to, first of all, daily time frame. Let me show you. Well, let me turn on the logarithmic scale. Let's switch to weekly time frame, and we can clearly say that from this bottom, Tesla completed its, wait a second, I will show you like this. This was its first wave, this was its second, this was the third one, this was the contender to be a fourth wave, and we are seeking the top of our fifth wave on its biggest scale. And guys, I want to pay attention only to this part, to the fourth wave and to the beginning of the fifth wave. That is why let's switch to daily time frame, and let me show you. Wait a second, I have to turn off logarithmic scale. And from this bottom, as you can see, I made a lot of analysis on Tesla for my Discord group members and for my private students. And from this bottom, guys, we can clearly say that it completed its first wave. By the way, the fifth wave in this particular case is in shape of diagonal. This means we have to have 5 waves to the upside, but each wave should have only 3 waves in it. And we can clearly see these 3 waves from its swing low that was established at the very beginning of January of 2023. And right here it was, wait a second, I will show you right here, ABC, like this. This was the A wave, B wave, and C wave. Then we had another ABC, A, B, and C into the second wave. And here is the part or the entire third wave. This is the A wave, B wave, and C wave. And guys, for now, we are again in ABC to the downside. And this, as you can see, we broke a crucial level for B wave. It doesn't mean that we invalidated the entire count, but it means that the golden pocket range was broken, and statistically it was the most probable range of trend reversal. And most probable doesn't mean that it has to have a trend reversal in 100% of cases. And this means, guys, we broke it to the downside, and we are still, in my opinion, in the B wave on this scale, because this is nothing else but another. As you can see, if I mark it like this was the first wave, this is the second, this is the part of the third, and in my opinion, this ABC to the upside cannot be the entire third wave. It is just a part of the third wave. It is just an A wave on a bigger scale. We are forming the B wave to the downside, and the next C wave should hit much higher targets. And for now, let's focus on the smaller time frames. And right here, you know that ABC corrections has certain rules that C wave should have a shape of 5-wave structure. And from this top, guys, we have, this is our first wave, this is our second, this was our third, this was the top of our fourth, and this is the extension, huge extension in the fifth wave. And this bottom potentially might be a perfect contender to be an end of the C wave on a bigger scale, and from this point we might go to the upside. And all of the counts, guys, bear count and bull count, for now have one particular part in common. We have to see a huge bounce to the upside, and because of this, most likely this is at least a local bottom that we have to prove or disprove. And let me show you on a smaller scale what do we have inside the fifth wave. Let's switch to, let's say, 30 minutes time frame. And this structure is quite tricky, but let me try to make this breakdown. Wait a second. Potentially, this is our first wave, second, 5 waves into the third wave. Clearly, you can see that this is the top of our fourth wave, and most likely this is the bottom of the fifth wave. Let's turn off the wave itself in order not to have a lot of mess on the price chart. Let's focus for now on the latest fifth wave. So, and here we also can see this is our first wave, this is second, third, fourth, and potentially it is the bottom of the fifth wave. Let's downgrade this scale even further. So let me do it like this to see all the waves properly. Let me do it like this right here. So this is the fifth wave, this is the fifth wave, this is the C wave, and wait a second, I have to change these two parts. Okay, so potentially this is the bottom of the entire retracement, and if it is the case, guys, we have to see first 5 waves to the upside, and well, for now it is quite tricky, but most likely we have to see at least one more leg to the upside in order to complete this wave. And when and if it happens, guys, we have to see the retracement. And this retracement shouldn't break this bottom, and this will be the confirmation of new uptrend, because the trend, the definition of trend is the higher highs and higher lows means that we are in uptrend. Lower highs and lower lows, it means we are in downtrend. And guys, let's again zoom out to, let's say, 3 hours time frame. Let me show you its crucial points. As you can see, if I pull the Fib retracement tool from its bottom of the A wave to the top of the A wave on this scale, from this point at $143 that was established at the end of 2024, end of April of 2024, to this highest point, we have As you can see, we have a perfect bounce out of 0.786 fib level, and this is also quite good level because we have a confluence even with this range of support that it had previously at the end of October of last year. And on top of that, guys, let me show you this major trend line. Let's switch to daily time frame. If I connect both of these bottoms, as you can see, this one and this one, we can clearly say that it is the range of support. And if I connect these two tops and basically even project this line higher, we can clearly identify that it is forming some kind of expanding diagonal. And if so, guys, we might land again at this point, but it is partially bear count because it is not so deep from our current price. It is about 27% compared to this huge drop of to its lowest point of about 55%. It is just a fraction of this movement, but nevertheless, guys, we have this level of support that potentially shouldn't be broken, and the next wave should be again 5 waves to the upside. We have to have, first of all, the confirmation of the beginning of new uptrend by breaking above let's say this previous swing high. The fourth wave on a slightly bigger scale should be broken, and it is the level of around $300, round number by itself. Previous swing high of the fourth wave on a smaller scale is this one, $262. But guys, I think first of all we have to see this retracement, and if it is the case, guys, this might be the first, second, third wave should break at least this top at $266. Then we have to have another leg to the downside, and fifth wave potentially might break this previous swing high of $300. Then again we have to see movement to the downside in three wave structure, and this will be another wait a second, I will show you this wave. I will enable this wave, and this will be another accumulation point for you if you want to catch its next major movement to the upside on the biggest scale. So guys, you don't miss anything with this asset. We have to have more confirmation in order to find out where we are on the price chart, but even if we are in bear case, guys, we have to unload this entire structure. And even if this movement is corrective movement, we have to see it to the upside that potentially might break $300 or $320. And guys, in this case, if this retracement happens to the second wave, or it will be the retracement to the B wave if it is ABC correction, we shouldn't break this bottom, and this leads to quite decent setup. Let me show you like this. If you accumulate your position to the downside and put your stop loss slightly below this bottom, your upside potential might be to see the breakout above $300 up to 26%, with the downside potential of about 12%. But if this asset goes to the downside, you can incrementally dollar cost average your position, and in this case, guys, risk to reward ratio of more than 3.61 to 1 is a very achievable target, and in this case, guys, you might have up to 31% in the near term perspective, with quite low risks of about 8.67%. So I have to say that if you want to know more about this type of analysis, if you want to have more details, if you want to use my brain and my experience in your favor, feel free to join my Patreon account, and I suggest you to enter as a gold tier member, because in this case, guys, you will have weekly one-on-one Zoom calls, 30-minute Zoom calls with me, where you can ask any question that you want. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this